Well, we have changed and we have grown quite quickly over the last 18 months. If you turn the clock back to the beginning of 2017, we didn't have any reserves, we didn't have any production. Now we're actually one of the leading ASX listed oil companies by reserves and production. What we've actually grown into, and we are today, and we want everybody to really understand, is we're really almost the only remaining Australian oil company. There are a lot of companies with a lot of gas, but we're the company that has that strong focus on oil. So that's what we've achieved. Where are we heading? It's more of the same. We have a wonderful platform in the Aneth asset, which we acquired in November of last year. We acquired that as a growth asset. We had to be a bit coy when we were still in a competitive environment and hadn't closed the deal as to, what the upside potential in Aneth was. And only last week did we start rolling that out so that people could see that not only are we a leading oil producer today with some of the highest percentage of oil reserves, and both in absolute and relative terms among our Australian listed peers, but that we've got a really deep pipeline of organic growth at Aneth that we're very much focused on delivering. Yeah, our operations have really advanced. With the acquisition of the Aneth oil field in November of last year, our model was that we thought it would take us about 6 months to comfortably transition into becoming the operator of Aneth. We thought that it'd take us another 6 months to actually then figure out how we were going to take over and start growing the asset. What's transpired since is that transition went extremely smoothly. We really had comfortably transitioned into operatorship by the end of January, and we were ready to really get on with the business. And so in terms of those operations, we've laid out a clear two-stage development program for Aneth. Those operations are now well and truly in train. We put out an updated corporate update presentation last week that shows how those two stages are going to grow our reserves quite substantially, how they're going to grow our production quite substantially. So that's on the operated Aneth front. And in our other assets, we've completed the Grieve project. It's now up and running. It's producing oil. So that's all part of this transformation that's happened around Elk in our operations and our developments over the last really 18, 12, 6 months. As we took over those operations at Aneth, and we knew that we were acquiring the Aneth oil field as a growth asset, we had to be somewhat circumspect about communicating our vision for Aneth when we were in a competitive environment. Now that we're well and truly ensconced as the majority owner and operator of Aneth, what we're now laying out for shareholders and investors to look at is what we call a roadmap to 100 million barrels and beyond. The oil price environment is quite conducive to growing Aneth. We have 35 million barrels of proved developed producing reserves. We're producing over 10,000 barrels a day at Aneth. And with a strong oil price and with having a really clear-eyed understanding of how to develop Aneth, because we had such a smooth transition into operatorship, our first stage program, which we kicked off last week, is going to add another 16 million barrels of proved developed producing reserves. After we complete that stage one program, we're going to add another 30 million barrels beyond that. And with our existing Grieve reserves, our existing Madden reserves, when we bring that all together, we're at 100 million barrels plus. And beyond that, there's another 50 to 60 million barrels of resource for us to develop at Aneth. So our focus is going to be on delivering that growth in Aneth. Our focus is going to be improving the profitability of the Aneth asset. And we're going to demonstrate that what Elk is an oil company that has low risk, high growth potential with high margins. and that's all going to run to the benefit of shareholders. Those top priorities we have for this financial year are two things. Demonstrate that we've got the right operating and business plan for Aneth. And second is that we're going to go through a comprehensive restructure of the balance sheet. We're going to corporatize the balance sheet. We're going to refinance our existing debt so it's much simpler, it's lower cost, much more, provides a lot more free cash flow flowing into the business so we can actually realize all that growth we have within our existing portfolio. Thank you very much, and it's always a pleasure to update shareholders through Boardroom Media.